Funny. School. TV.
Those of you that were here last week, thank you for listening to me chat about my experiences in the audit area of an insurance company. Today, I thought I would talk about legal. The reason this is so important to me is that many of us are getting involved in these infinite banking process policies. And it came to me through a conversation with Craig Yanni about a year ago that I have an amount of knowledge that came to me through 30 years experience in the insurance industry. And he goes, I told him one little story that I'll share in a little bit, but he goes, that's really interesting. And I think you should share. So over the course of the past year, I've just been thinking of topics of what I could share based on my experience, because truthfully, I haven't had a huge amount of experience outside of the insurance industry for over probably closer to 35 years. I hate to admit that. Insurance has been my life. But what I've learned is that they have gone through so many trials and tribulations in 100 years of businesses being open that they have found the tools to keep a business stable and be able to react quickly if something isn't going the way you need it to go. So today I'm going to talk about legal, and I see Shauna and everybody here. And I wanted to talk about legal because it's behind the curtain. Many of us know that, like, as borrowers or lenders, law is that thing that many people are afraid of. And law tends to be that thing that we're all afraid we're going to get subpoenaed or we're going to get called into a lawsuit. And I was thinking, from my perspective, lawsuits were a normal everyday occurrence inside the insurance industry. And I thought, I don't have the same fears as other people. Why is that? So I kind of put together the idea that in the insurance industry, when we think about insurance is about protection. It's about safety. It's about trust. And most policyholders never see the network behind the scenes of what's put together to protect you. Not only does it protect you as a policyholder, but it really protects the employees and it protects the business for years to come. Insurance companies have a couple tiers of legal inside their doors. We have claims attorneys and we have corporate attorneys. And in some cases, depending on the size of an insurance company, we have compliance or accounting type of attorneys. Now, every company I've ever worked for has always had claims specific attorneys, and they've always had corporate specific attorneys. And I think that's important, and it's important for a reason that I'll kind of go into. When you're looking at an insurance company, what do you think the biggest expense is related to an insurance company? It's the idea of claims. Now, whether you're property and casualty, which is what I spent most of my career in, or if you're in life and health, claims is where our money is spent predominantly. I think that in my property and casualty days, 65% of every dollar was what the target was to hit before underwriting costs, which means the costs of operating the business. For every dollar that we brought in, that would be our cost of claims. So you really got to manage it and understand what's happening with it. And the claims department, the reason they had claims specific attorneys is they were always looking at, since we would write across a bunch of states, they were always looking at regions, they were looking at types of claims, they were looking at what does it cost if a claim has to go to a lawsuit, how do we manage and spend the reasonable amount of money and not be frivolous with, like, say, lawsuits, because we all know that everyone has a fear of a slip and fall in front of your house. But how does an insurance company manage that? And so we would have in-house claims staff, and then we would have adjusters, and we would have clerks that would actually manage this business internally so that we could control it. And then that team would put together rules that were used, that we would decide if something had to go outside, because it's always more of a cost if you go outside the organization. So I always found that interesting. And actually, at one point in time, I wanted to be a claims attorney, but things in my career turned in a different way. And they let me play there from time to time, but I didn't get to stay. That area, because it's all claims specific and it's all about settling claims, that's isolated and kind of different than like a corporate attorney. And a corporate attorney is somebody who kind of part of the executive team, sit outside the president's office, and they're part of like big contract negotiations. Like if you're buying in insurance, when we bought software, it was kind of like a PMC initiative. You were spending millions of dollars to hire teams to create new software programs specific to what your company needed. Or if we had big vendors that were coming in, they might take a look at those contracts. So that type of law was very different than a claims law. If we had issues accounting wise, we were doing ratings, because what many don't know probably is that the rates that an insurance company charges, they don't get to just arbitrarily say, hey, I want to charge this amount. You have to prepare a package, send it to the regulatory board, and they say yes or no. And they also approve deviations off of that, or surcharges based on maybe your loss ratio, or what they call experience modifications. So it's all so highly controlled that in my life, there was always legal somewhere, there was always audit somewhere, and there was never really a fear that when the economy turned, that my job would be impacted, because really it never was. Even when we went through the mortgage-backed securities thing, we had to do more work with what we accounted for, but it never really jeopardized anybody's jobs because we had all these safety features built within the four walls. So that's kind of what I was talking about today. And since I just kind of explained the idea of, we have claim-specific people that look at settling a claim. One of the things that always fascinated me about claims attorneys is that they needed to kind of get a feel for business and a particular claim, and where the level was that claim might jump to a lawsuit. And that's kind of why we always had in-house attorneys, because our job was to manage the money that was being brought in for premium, because at the end of the day, we have to be able to pay our claims one day. So what would happen is you would have these teams that would get together and they're monitoring these claims. And I hate to word it this way, but I heard it this way inside the industry many times. And I'll share some nicer ways to put this, but we had to have teams that would take a look at claims and determine what kind of cost it would take before this claim went to lawsuit. But we had to find out how much it would cost, how much we could spend up until the point that we were going to send something to a lawsuit. The reason being is, once you cross a threshold that you go into a lawsuit, it turns a claim into probably 10 to 100 times the cost in order to settle it. So we had in the industry something that some of them lovingly called shut up and go away money. And I know nobody wants to hear that. I didn't like it when I heard it, but when I started understanding the industry more, I realized that it was a tool that was used to protect policyholders. Even though we may not all understand that, I understood it when I started seeing the cost of what it was to hire an outside attorney firm, or to hire and go to a lawsuit, and to hire due diligence, and to hire outside adjusters, and to bring in eyewitnesses, and bring in professionals, medical professionals, anything like that. It became very costly. So it's more of an issue in the property and casualty area. You would have a more limited scope inside of life and health, but they have to identify at what point is it going to become a lawsuit that you have to hire outside staff. And it was always funny to me that they called it the go away value. You know, what cost is it to pay this claim so that you don't have this client wasting our premium dollars on a frivolous lawsuit. Now, what I do want to say in kind of talking about this is that it's never the case where you give it and you walk away. We always identified these people, that there was something questionable about them. We also listed, and we always knew what the avenues were for canceling a policy, because there are laws around that too. You cannot just cancel an insurance policy. It has to be for non-payment. It has to be for, that's why for a lot of people, you hate the idea of accident prone, or that you have a frequency of occurrences, but some of those things will impact your insurance, because unfortunately you're competing with people that are out there trying to get a dollar in an easy way. Now, that's more predominant in property and casualty. You're going to see more in the life area that any kind of lawsuits that way are are related to a question, say, on a beneficiary. Because the one good thing about life insurance policy is what we write are permanent life insurance policies, which means there is a payout. So the only question isn't whether it's a legitimate claim. There's either a death or there's not a death. The only question, so the legal expense on life insurance would be narrower, would be who is the beneficiary. So in that case, on the life side, it's a simpler process, which is kind of nice because you're not going to get the amount of legal expense that you could see on the property and casualty side. But I thought that was kind of interesting to share that, there's so many avenues that there are attorneys that are watching out for that. And the reason that came up is I was talking to Craig about a year ago, and I was telling him some of these things, and he was laughing at these stories. And then I told him a story that happened like outside of the corporate area. Because if you understand the idea, there's things inside the normal course of business and there's things outside the normal course of business. Now, if you were going to think about it, the idea of a lawsuit connected to a claim is within the normal course of business. So I did put together a list here of examples of things inside the normal course of business. So lawsuits within the normal course of business might be a denied life insurance claim, or something with the issue with the beneficiary, a disability claim over policy language, allegations for unfair underwriting practices, things like that might come up, and you would have to have your corporate legal people look at it. As an accountant, my job was to know what lawsuits were not in the normal course of business, because lawsuits were so frequent inside of an insurance company. They didn't want to know about the normal stuff when I reported our quarterlies, but I had to know about the outside of normal course of business. So one day I was walking through the corporate legal area and I walked by this filing cabinet and there were 2 bins on top with piles of lawsuits, because you know what a lawsuit looks like. You got these legal papers, you can see all the stamps on it from the courts, because in those days a lot of that was still paper. And I see these piles of them, and I had just filed my quarterly statement and there's like 10 pages of legal questions you have to answer, and I'm like, oh, I didn't report these. I don't know what these are. And I'm like freaking out. And I run into the corporate legal office and I'm like, what are these things? Why didn't you tell me about these? And I got really I got upset about it because I'm thinking, I just submitted something and it's wrong. And they started laughing at me. And I'm like, why are you laughing? This isn't funny. This is a problem. We have to amend returns. And she goes, normal course of business. And I said, I don't know about this. What are you talking about? I understand normal course of business for claims. I understand it over here. And what ended up happening, and it's kind of sad, I guess, in a way, but what those were is they were stockholders' lawsuits. And I said, well, what triggers that? And what she told me is that I worked for publicly traded, and now most of our insurance companies we work for are not publicly traded. We're actually mutually owned, which means the policy owner owns the company. But this particular company was a publicly traded company, so it was on the stock exchange. And what ended up happening is if the stock prices went too high, they filed lawsuits. And if the stock prices went too low, they filed lawsuits. And I'm like, normal course of business? She goes, the only reason you never saw these before is, she goes, they used to sit on a table inside here on the back credenza. I just got tired of looking at them and I put them out in the hall. And I said, so what do you do with them? And she goes, once a week, we go through summary. There's something called the summary judgment, which just means it's kind of a frivolous lawsuit. They stamp it, they file it, and it gets dismissed. So that's what they had to do to go through all of these. But Craig was laughing because he said, I never heard of anything. I said, I didn't either. And I'd been in the industry for so many years. And I was always on the hunt because I knew that I was signing off on these legal questionnaires that had to be filed with the National Association of Insurance Commissioners. So I was always on top of like, hey, what is this? Tell me what this is. Where is this from? How is this impacting my financials? Because that was really important to me. The quality of my work was important to me. And they were just laughing. I was so mad at them. I'm like, this isn't funny. So that was the story that started all of this, because about a year ago is when we were actually at a Money Tank event, and Craig brought that up. He said, you should start sharing some of what you have learned in this industry. So it's been a case for me to learn what's the normal case and what's the out of the normal course of business. And it made me realize that for most of us in these smaller businesses that I've been seeing and working with since I left the industry, everyone's afraid of legal, but I was never afraid of legal because it was a part of my everyday life. I just had to identify what's out of the normal course of business. And I think for most businesses that are smaller, everything is outside the normal course of business. So there was more fear around it. I understand that fear. And in a way, I'm very grateful for the time I had within the industry because it helped me to look at things different. And I'll throw you guys a bone because if you happen to watch Ask Me Anything yesterday, Craig thought that my story I was going to share was around water. And that wasn't the one I was thinking of. It was this because this is what triggered me to start talking about insurance. And what he meant by water is, for anyone who doesn't know, the very first PMC event we went to, not him and I went to together, not, we met for the first time there, was the PMC launch. We went fly fishing. I stepped on a slimy rock and I went swimming with the fish. So I think he thought that was the story I was going to tell. But what I wanted to share is this idea of lawsuits outside the normal course of business, because he thought it was funny that I wouldn't have even known that that was in the normal course of business. And had it not been for the industry, I wouldn't have. I've worked for mutually owned, and mutually owned, our policy owner owns the company. Publicly owned, which means your stockholders own the company, which is where the lawsuits came from, because people sitting on the street watching the New York Stock Exchange thought we didn't do something right, so they filed lawsuits. Or you have publicly owned. And publicly owned, it's a few people at the top who put money into the company, so it's not as regulated as a privately owned, and those people don't necessarily care about you as a policyholder. They have to follow all regulatory rules. They have to pass all their NAIC audits. They have to do all of their filings, but they also have a self-interest as well as keeping this business running according to the NAIC rules and according to the audit rules and according to actuarial rules, because there are rules around actuaries and how they price products. So it is really interesting. And I agree 100% with what Linus is saying here. A mutually owned is a beautiful tool because not only are you benefiting from the profitability of the company, but you are also an owner of the company. So all decisions are being made in your best interest because you are kind of like they always talk about the coin. You're on both sides of the coin. You are the owner and you are also the beneficiary, or you are appointing the beneficiary to your policy. So you're on both sides of it. So I always thought that was kind of an interesting thing. And it made me wonder, because when I came out, highly oversaw, highly scrutinized, and I answered many questionnaires, because if you fall outside of normal ranges on any kind of a ratio, you have to dig in. Like, just to kind of give an idea, I did a lot of analytics fluxing. And what that means is I would take a balance sheet for, say, June 30th, and I would flux it against a balance sheet for September 30th. And what I had to do is flux out and see, based on, say, year to date, the prior year, are we coming up to a similar percentage as we did the prior year? If we weren't, I had to dig in and say, okay, what line of business does it look like we have an issue with? Okay, I've got the line of business. What state or what region does it look like it's coming up in? Okay, now I've gotten to that point. Was there a catastrophe in that area? Did we have a hurricane? Did we have a coal mine collapse? What could have happened in that area? Okay, if it's not any of those, did we have a severity claim? Did we have a huge catastrophic claim settle? Did we have a bad faith claim settle? And that's a no-no in the insurance industry. Or do we have frequency issues? What kind of happened to trigger this change? Because if any of you have been around this campfire, you'll hear Chris all the time talk about key performance indicators. And he takes a look at them and he says, okay, this and this would expect this kind of a result. And if he's not getting this result for these two numbers, he wants to find out what happened here. Well, it's kind of the same thing in the insurance industry. So I'm going to say, even from the perspective of this crew of people that you're around, they understand it in the way that an insurance company operates, which should also give you a whole new level of confidence, because he knows his numbers. This entire team knows their numbers. And if their numbers aren't hitting, they're digging in the same way that I would have to dig into a financial and explain it to the National Association of Insurance Commissioners or an auditor. They're digging in and going, hey, this doesn't make sense. We know based on trends, this is what should be happening. If it's not happening, what are we going to do to find it? And honestly, in a lot of ways, that's what actuaries do to kind of price products. They do the same thing. My experience with actuaries, and I'll say it kind of quickly, is, and I did work hand in hand with actuaries on a regular basis. What they did is they would take all of the claims out there and they would come up with 3 different calculations. And it would be like, in the range of what was acceptable in the industry, and it would go before the board. And every quarter the board would say, are we going to be, and it's not a huge difference. These 3 numbers are not a huge difference, but you're talking about billion-dollar companies. Are we going to be a little more conservative because we see the horizon maybe iffy going forward, or do we think that we're going to be able to release reserves down the line? So all these kind of things are into play. And I know I talk very fast, so I'm going to have to work on that. But what it provided me is an opportunity to work in an industry that was stable, an industry that had their finger on what was going on, and an industry that was highly scrutinized. So if anything looked kind of funny, there was somebody coming in right away and saying, hey, let's get a handle on this right now and let's fix it. I know I talked last week about, I worked for a company, a very small insurance company early in my career. We knew we had a bad faith claim out there. They told us if that bad faith claim went against us, the state would come in and take over. And sure enough, they did. The bad faith claim hit on a Friday. By Monday, they were in the office and we were working for them. So I love how regulated, how controlled, and how much of a finger on the pulse of what's happening they have. As a small business owner, you wouldn't see that. And for me, I had to kind of learn that part of it, because the unknown for me was never there. It was always known, and you were always answering for it. I know I've talked now for about 25 minutes, and I'm only supposed to go for about 20. So I'm going to go through the list here. And I know I talked about a lot of information. So if there's things you want me to talk more about later, or even take it into another week, I definitely will do that, because I didn't realize what, like, I have been filling this head with stuff for over 30 years, and it just kind of spills out sometimes. I have like a 6-page outline here, but I know I kind of spill sometimes too. So anything I can help you with, know that I'm here for that. I believe in what this can do for us, and I believe in the strength of insurance companies, because I lived it, I breathed it, and I prepared those financial statements, and I answered for those financial statements. So I know what it takes to put them together. I know the processes. I know the audits. I know the regulatory filings to get your rates approved. I've seen all of that, and I've participated in it. And I myself have policies. I have 3 policies, and my only regret is that I don't have more policies. I wish this is something I'd known sooner. I am excited that Chris is getting into the idea of teaching this to children. I think it could change so many lives. Now I'll try to stop talking because I'm on a soapbox right now, but I'll check for comments, and anything I can do to help, I'm here for that. I want to share my experience. I am grateful and blessed that I had a career in the insurance industry. I didn't become a CPA because my credentials are all in insurance. I went to specialized insurance training programs and got my credentials that way. Like, I have reinsurance credentials. I have insurance accounting finance credentials because that was my direction. But that is also because this was my life. So I'll look through for questions, and I apologize, I'm a rambler, but this is passionate to me. I believe in this. And if you know me at all, I will not fight for something I don't believe in. I'll walk away quietly, but I will not fight for it. And I know these companies like the back of my hand because they were the back of my hand. I'm not seeing any questions, but again, my email is just tess@chrisnoggle.com. So if you have questions, please always feel free to reach out to me. Linus and I would love to, because we're working together now to take clients from start to finish. And if there's anything we can do, we would love to help you. Linus is as passionate about this as I am, because him and I spent a weekend together at one of the insurance companies about a month ago. And we both believe very strongly in what this is and what it does. And Linus and I are up to something else too. So you'll have to keep your ear to the nose, the grindstone, or whatever it is. But we tossed out that we want to hijack Take Control Tuesdays. So probably not till fall, but we've already started that process. So let's see what happens there. So keep your ears open. We would love to be here to help you. And if there's anything that I can tell you from my years in the insurance industry, I want to share that. I didn't realize what a gift it was for me, but I never worried about a job. And once I got established, I really never had to hunt for jobs. The only time I interviewed for a job after that very first insurance job was when I got a bug in my bonnet and I decided I wanted to do it a little differently. And I went and worked in the medical malpractice unit of an insurance company called Trinity Health. And I worked they had an offshore captive in the Cayman Islands. So I actually worked on the financials and submitted them through to the Cayman Islands. So that was kind of an interesting turn. So I got to spend 5 years on the insurance side preparing the financial statements because they self-insured a piece of the business. So is it something I know like the back of my hand? Yeah. And I love that I can still be a part of it here, but share with you guys what I learned through the process. Thank you so much for sharing. You can reach out to Linus or I, and we would love to help. And again, any questions, please reach out. I know I have a lot of information and I did try to stick to my little schedule here, but I get excited. When I get excited, I just keep going. So if there's anything I can help you with, please let me know. The time just hit 11:30 and I want to respect that. So thank you guys. And if you are around next week, I'm going to talk about premium writing controls. I did a lot of work with how they control the premium, and it is controlled in a very unique way. And it's also helped by this thing called reinsurance. So if you come back next week, I will share that with you because that was something I got involved with and did billings with, and also did collections, collecting back money related to claims. So I'm going to share that next week, and I would love to see you back here. And in the meantime, please reach out. Linus and I would love to help you with next steps, and keep your fingers crossed. We're going to try to hijack Take Control Tuesdays, one of these days, probably towards the end of August. Talk to you guys soon, and thank you.
Money. School TV.